obviously I try to avoid speculative investments as much as possible. But early on in my investing journey, maybe 5 or 6 years ago now, I held a lot of ETFs and I had about 50% of my portfolio where I was pretty much purely speculating. But that was mostly out of the fact of just not being an informed investor whatsoever. It was all I knew what to do at the time. I eventually shift back to completely ETFs, which I guess if there's a spectrum is the opposite end of a speculative investment. It's probably the most risk-free you could get unless you went into something like bonds or something like that. Um, and then more recently, since I've been running a concentrated portfolio, I have had more speculative investments compared to others. I wouldn't call them speculative. The number one being probably Seritage Growth Properties, which obviously for you guys you might not see as a speculative investment, but at the time I made it, I really just didn't understand the business well enough. So I was in and out of that trade pretty quick. I think I only held it for about maybe 2 months. And I kind of made the investment as a somewhat clone, I guess. I had done a little bit of research, but the more research I'd done, the more risk I felt like there was. So I exited that trade pretty quick. And then I guess even now in my portfolio, I hold Redbubble, which is, I don't find it a speculative investment, but it's towards the more speculative end where there's a lot of execution that really needs to take place. It's not a no-brainer like something like Kelly Partners Group was when I made that investment. But overall, I guess it's something I am just trying to avoid completely. But I'm always willing to allocate smaller positions in my portfolio to something a little bit more towards a speculative scale, if that makes sense.
So the way you see it is the higher growth expectations are, the more speculative that is. Whereas if it's something maybe more certain, or I mean, nothing's guaranteed, but something like a bond, like you mentioned, that would be towards the opposite end of that spectrum, right?
Yeah, I think partly to do with predictability. Like if I can see a company's going to grow at 5% each year for the next 10 years, and it's been doing that for the last 20 years, I can't think of an example at the top of my head, but there's investments like that. Whereas some of the positions I hold where they're earlier in their early stages of a company, and really it's hard to predict the growth moving forward. It's hard to know what kind of cash flow they'll be able to generate. I even make some investments in companies that aren't profitable yet, so I guess I am speculating that they'll be able to achieve these types of earnings numbers and the margins and everything else. Whereas you could go the opposite end and you could have a company that's had 20% margins for the last 20 years and they're probably going to keep it that way. So you can kind of see that growth moving forward. They might even have a backlog of revenue or contracts coming forward, so you would know that they can continue to do that. Something like Huntington Ingalls, like Phil Town has invested in, is a good example of that. They've kind of just grown slowly over time at about 3 or 4%. They have a backlog of revenue that they can eventually dig into, so they'll probably keep growing at that rate. And that's typically a blue chip type investment, I guess, where they probably end up paying a dividend. That's on the more predictable opposite end of the spectrum.
But I mean, you're gonna, with anything that has a lot of growth projected, you're probably gonna discount it. I know you or discount it more heavily. I know you run with, I think, the 15% discount rate is your target generally, Frank. And the more speculation you have in there, you're kind of counterbalancing it with a discount. Look for a higher margin of safety or something like that. Is that right?
Yeah. So in any speculative, it's really not on towards the Bitcoin end of the scale, I guess.
Sure.
But, I'm looking for a margin of safety and some kind of, I'm discounting it back over time. So I'm always trying to have some type of safety to that bet, no matter how risky it could be.